Tesla has further solidified its status as one of the world's leading automakers. The Silicon Valley company has beaten Wall Street expectations for its first quarter results, which were boosted by record deliveries despite a global chip shortage. But Tesla is also cashing in on its foray into digital assets.
We do believe in the value of Bitcoin. It is our intent to hold what we have long term and continue to accumulate Bitcoin from transactions from our customers as they purchase vehicles.
Let's get more on this now with Jim Holder in London. He's an auto industry analyst and the editorial director at Haymarket Automotive. Welcome back to the program, Jim. Now, it's interesting sort of digging through the latest Tesla numbers, another record profit, as we know. But interestingly, it made most of this money from a windfall that it received from selling Bitcoin and regulatory credits. So selling cars really didn't make up the bulk of this record bumper quarterly profit. Is that a concern for the company that its core business isn't actually what's making its money, at least in the last quarter?
If it is a concern, it's probably a small one at the moment. You're absolutely right. It needs to transition to a point where, as a car company, the bulk of its profits do come from selling cars. But for now, it can see a strong forward path for these regulatory credits that it's selling to other car makers to help them offset their higher emissions vehicles. And then the Bitcoin side of it, well, who knows where that will lead? Yes, potentially it is a concern if it is putting too much risk in one place. But for the time being, it appears to be a profitable move.
So how is its core business going, its electric vehicles? We know that there's huge demand for its Model Y series SUVs. We know China is still a big buyer of its cars. Is that part of the business going well despite this global chip shortage that we're seeing?
Yeah, remarkably, Tesla appears to have negotiated its way around this global chip shortage that is curtailing the manufacturing of cars from other manufacturers. They say they moved fast. They say they worked with their suppliers to source alternatives very early on. And so far, that seems to be reaping dividends. The car business itself, yes, it's going well. You know, at around 500,000 sales last year, Tesla was on an upward curve. It's looking to add 50% to that figure this year. No other car maker really can match that sort of growth at the moment. The new Model Y is definitely going to accelerate the uptake of their vehicles again. It gives us access to a more profitable type of car in the SUV. It is now looking and claiming it's going to be achieving 50% growth, not just this year, but in future years as well. They are remarkable figures. They put Tesla on a footing with more established, long-held, profitable car makers. And we have to accept now that Tesla has bucked the trend. It has managed to survive where many others haven't, and it has established itself in the car market as a hugely desirable brand.
And I guess the big thing to watch now is the other traditional car makers looking to muscle in on its EV turf. Jim Holder, we'll have to leave it there, but thanks as always for your analysis.